Folks, let's talk about how you should buy Bitcoin, the revolutionary, decentralized digital gold. Now, when Bitcoin first hit the scene, the only way to get your hands on it was through some pretty questionable exchanges or peer-to-peer deals. And after you bought it, you had to navigate the tech maze of cold storage. Most investors aren't tech nerds. They don't want to jump through these hoops. It's like the internet. You don't need to understand it to use it. You also don't need to know how the like button works, but if you do hit the like button, I really appreciate it. It does help with the Google algorithm. So let me tell you, Bitcoin's technology is nothing short of revolutionary. The beauty of Bitcoin lies in its decentralization. It's not controlled by any corporation or government. If you hold the keys to your Bitcoin, it's yours, free from interference. Of course, this brings its own set of challenges. There are countless horror stories of people losing fortunes because of corrupted hard drives or throwing them away by accident. So cold storage isn't risk-free. Early adopters were enamored with Bitcoin's potential to usher in a libertarian era, much like the early days of the internet. They saw it as a tool to minimize government intrusion in their lives. But let's get real. Most people today don't care about the tech behind Bitcoin. It's the same for me. I think it's cool tech, but it's not necessarily the only factor that I care a lot about. Most people want to be exposed to Bitcoin's price appreciation. Back in 2013, the Bitcoin Trust was introduced. It wasn't an ETF and often traded at a premium or discount, failing to track Bitcoin's price perfectly. Despite this, it was a great way for people and institutions to invest without dealing with the hassle of exchanges and securities. However, today is a different era, and that's because the SEC has approved several spot Bitcoin ETFs. Now, ETFs are different than old Grayscale Trust. For one thing, it actually is supposed to match the spot price of Bitcoin. So the Grayscale was kind of crazy because you would oftentimes buy the Bitcoin Grayscale, but you might be paying 40% more than the real value of Bitcoin. So that's insane. Whatever the price of Bitcoin is, you don't want to pay a 30-40% premium over that. So with the Bitcoin ETFs, you're actually paying pretty much exactly what Bitcoin is worth. So if it goes up 10% from here, you should also get 10%. So there are quite a number of Bitcoin ETFs. There's a Bitwise ETF, 0.2% annual fee. All these have an annual fees, which is actually quite different from owning Bitcoin outright. For instance, the ARC21, that has a 0.21% fee. iShares 0.25%. Fidelity is 0.25%. Van Eck Bitcoin 0.25%. Franklin Bitcoin 0.29%. WisdomTree 0.30%. Invesco 0.39%. Hasdaq 0.9%. And they still have the Grayscale Bitcoin Trust. It's 1.5%. Which is really ridiculous in this era because the other ETFs are charging 0.2%, so it's absurd to pay that much. Now, let's talk a little bit about the downsides of these ETFs. Now, in terms of which ETF you should choose, I personally recommend Fidelity, and the reason for that is because the Fidelity one, which I believe charges 0.25%, and the custody of the Fidelity one is also owned by Fidelity. So Fidelity has really moved into the crypto kind of market. They have the Bitcoin and Ethereum available, and they sell they sell the ETF, the Bitcoin one, but they also allow you to buy Ethereum on their through their own Bitcoin digital asset management. Anyway, let's talk about some of the downsides of these ETFs. Custodial risk. Most of the ETFs use Coinbase as their custodian. I have no beef with Coinbase, but it does introduce counterparty risk. If something happens to Coinbase, your investment could be at risk. Fidelity, on the other hand, as an example, holds the Bitcoin themselves, so they're minimizing that risk. At 0.25%, it's the cheapest. It's not the cheapest, sorry, but it's actually better than overpriced Grayscale Trust. Now, fees. If you plan on holding Bitcoin long term, consider buying it directly from an exchange. You won't pay the annual fees that come with an ETF. Trading hours. Now, this is an important one for some people. Some people are almost addicted to trading Bitcoin. Bitcoin trades 24 hours a day. It doesn't take off for holidays, just like the stock market. So, whereas with the Bitcoin ETF, you can't trade that 24 hours a day. You can only trade it while the stock market is open from 9:30 a.m. to 4 p.m. Eastern Standard Time, and obviously not on holidays either. Retirement accounts. Now, you can actually buy Bitcoin ETF in your retirement account. That would be pretty difficult to do in a traditional crypto exchange like Coinbase. I don't think that there actually is an option for that. I actually did put in 20. I actually allocated 25% of my retirement account for Bitcoin. So that shows you how much I actually believe in this technology and its ability to appreciate quite dramatically. Now, if you're one of those people who has Vanguard, you're going to be out of luck. Vanguard kind of likes to be the training wheels of investing, so they like to really hold your hand and stop you from making mistakes. So they don't think you should be buying Bitcoin, and they won't allow you to do it. And they not only did they not sponsor a Bitcoin ETF, they actually won't allow you to buy the other ones either. So I think that's a little bit ridiculous and paternalistic. They shouldn't be doing that, but that's basically what they do. So there you have it. Where you go with an exchange or with an ETF, make sure you know the pros and cons. Bitcoin is here to stay. I'd say if you want to buy Bitcoin for the long term, it might make sense to buy it on the exchange, on a real crypto exchange like Coinbase, and you could either hold it on the exchange and take the risk that something will happen, or you can take it off the exchange and hold it in a cold wallet. Now, with an ETF, the great thing about it is that you don't have to really worry too much about the security of your Bitcoin, because that's basically being handled by someone else. So I think some people, they don't necessarily think that they have the ability to handle that kind of security. And at point two, it shouldn't matter too much, especially if Bitcoin continues to rise pretty dramatically from here. I don't think that it should matter too much. I think that Bitcoin, I think that the original founder of Bitcoin, though, would think it's amazing that there would be an ETF of Bitcoin, because Bitcoin was supposed to be completely separate from our traditional financial system. The whole point of it was that you bought your Bitcoin, you hold it off the internet, you hold it self-custody, and then you could buy something from someone else with it. You could kind of somehow make a transfer, and you were not connected in any way with the traditional banking system, and you were just basically making peer-to-peer transactions. Now we're kind of putting Bitcoin back into the traditional financial system. In a way, that could be bad, because it means that the government and large corporations have more control over it. But on the other hand, that could cause more mass adoption for Bitcoin by getting the more traditional players. And if you care more about price appreciation, you want these big institutions to actually get involved in buying Bitcoin, because that's going to actually cause the volume to push the price up. Because as much as we all love Bitcoin, if just consumers are buying it, that's not enough to cause these massive price appreciations from here. You're going to need BlackRock, and it would be great if Vanguard gets involved in it. It'd be great also if you get more pension funds buying it, because if some of these extremely large players even allocate 1% of their funds to Bitcoin, that would be enough to just drive price appreciation pretty dramatically. So anyway, I appreciate your thoughts on Bitcoin. Please hit the like button, subscribe, and leave a comment below. I want to hear any questions or comments or ideas you have about Bitcoin, and whether you chose the ETF route or to buy Bitcoin directly. Anyway, talk to you soon in the next video. I'm leaving it to the 10-minute mark.